Any long-term outlook for Bitcoin toward 2030 to 2050 must seriously consider structural risks alongside bullish projections. While scarcity, institutional adoption, ETF inflows, and macro hedging narratives support optimistic forecasts, Bitcoin remains a highly volatile asset exposed to regulatory, technological, and systemic threats. One of the biggest long-term risks is regulatory tightening. Governments could impose stricter controls on crypto exchanges, wallets, taxation, or even outright restrictions in major economies. Coordinated global regulations targeting anti-money laundering (AML) or capital controls could reduce liquidity and investor participation. Additionally, central bank digital currencies (CBDCs) could compete with Bitcoin in certain use cases, limiting mainstream transactional adoption. Another critical risk is technological vulnerability. Although Bitcoin's blockchain has never been hacked at the protocol level, exchanges and custodial services have suffered breaches. A large-scale exploit targeting infrastructure, mining pools, or a severe software bug could temporarily shake confidence. Furthermore, long-term concerns about quantum computing remain part of speculative risk discussions, even though they are not immediate threats today. A particularly sensitive scenario involves Satoshi Nakamoto, Bitcoin's pseudonymous creator. It is estimated that wallets associated with Satoshi hold roughly 1 million BTC, mined in the early days of the network. These coins have never moved. If those wallets were hacked and a significant portion of that BTC entered circulation, the market impact could be dramatic. In such a scenario, the immediate effect would likely be panic selling and extreme volatility, driven by fear of supply shock and weakened trust in the ecosystem. Markets could interpret movement of Satoshi's coins as either a security breach or loss of long-standing assumptions about dormant supply. Prices could sharply decline in the short term due to increased circulating supply and psychological shock. However, it's important to note that even if those coins moved, Bitcoin's underlying protocol would not automatically be compromised. The blockchain would continue to function unless the hack exposed a fundamental cryptographic flaw. If the incident were limited to private key compromise rather than a protocol break, long-term recovery could be possible once stability returns. Overall, while bullish scenarios envision Bitcoin reaching six-figure or even million-dollar valuations by 2040-2050, the asset remains exposed to regulatory crackdowns, macroeconomic shifts, technological disruption, and extreme tail risks such as dormant whale wallet activation. Investors must weigh both asymmetric upside potential and systemic downside uncertainty when considering long-term projections.